Welcome back. The BHP spin-off of South 32 to many looks like a gift, but is it a gift that will keep on giving? To find out, I'll ask the former CommSec boss and Switzer Super Report analyst Paul Rickard whether he will be a holder of his South 32 shares when they arrive, and then we'll explore the outlook for oil and iron ore prices to try to work out whether you can believe analysts' very positive views on companies like BHP, Rio and Santos. Paul, thanks for joining us.
Thanks, Peter.
OK, let's start with South 32. Are you going to keep them when you get them?
Well, they're effectively free. I'm not paying anything for them because it's a spin-off. So this is BHP getting rid of the sort of the 5% of assets it doesn't want. It's non.
Well, why do we want them if they don't want them?
Well, it's one of these demergers, so we don't have to do anything about it apart from we get a chance to vote on this.
Okay.
South 32 is a collection of about 15 assets that BHP says it doesn't want. A lot of them are from the ex-Billiton part of the business. Businesses in South Africa, a little bit in Colombia, some in Australia, so very much things like aluminium and alumina, lead and a few other sort of manganese sort of there. And sort of this is part of BHP's strategy to say, look, let's focus on our core businesses of iron ore and oil and copper and so on. And that way, if we sort of create a new entity and we get a new management inside, they'll be able to really drive these assets really hard, put a lot of focus on it, all the good things.
Don't be cynical, Paul. I can see cynicism.
All the good things you read about.
Yeah, but it's interesting what George was saying is that they'll probably have assets that won't be affected by this massive oversupply like iron ore, and so if there is a global comeback, these sort of things like manganese and stuff, they actually could, and copper, they could actually go up in price.
It won't have copper, but you're right, they will have other assets that may be attractive. I mean, the company itself will be worth about $15 billion. Sounds a lot, but it's about 5% of current BHP for a start. And it will be, on the Australian Stock Exchange, it'll be a top 30 company. And it'll make it into sort of the 20 largest sort of mining and metals companies in the world. So it's there. The question is, anyone wants, but on the one hand, you're saying, we're BHP, we don't want them. And then they're sort of hoping that somebody else magically comes along and says, yeah, I want it,
Well, Paul, you've written an article on this. What's the impact on, you particularly say BHP is more a dividend company nowadays. Does the dividend for people holding BHP shares improve because of South 32?
Well, it doesn't, but BHP argues that total dividend will improve because BHP's made a very strong commitment to keep their current dividend unchanged, or at least steadily rising. Yeah. So for your existing, what you're going to end up with following the demerger is one BHP share and one share in South 32. Yeah. So you're going to get the same dividend for your BHP shares you had before, and you might get a dividend for your South 32 shares. So for existing BHP shareholders, arguably their cash flow is going to improve. The thing I don't necessarily like about this transaction is not that they're doing it, because, I can see there's some argument it's about unlocking value, and maybe someone else will want it. But the thing I don't like about it is the costs.
Yeah, OK.
Now, this is going to cost, if it's completed, about $732 million to do, right? Okay. So something worth $15 billion, we're spending $730 million to complete the transaction, right?
They seem very keen to get rid of it, don't they?
Most of that a lot of that goes into stamp duty and those sort of things. Yeah. But even so, to get the deal to this point, they'll spend almost $300 million to get it to this deal. So if shareholders vote no, that's what's going to be lost. Now, the irony is, the board didn't need to get shareholder approval. It makes it very clear in the experts' report that no shareholder approval is actually required.
Why do they do it then?
Well, I don't think I think they just need that tick. I mean, the BHP board, in fairness, has not had a great record in acquisitions.
It doesn't like fairness. This sounds like unfairness.
Well, maybe unfairness, but challenge. Pick me up on that. But look at the merger with Billiton. Arguably, was a mistake. Its investment in shale oil in the US was a mistake. Its purchase of the potash in the US was a mistake. Record in acquisitions not strong.
Great.
I think they said, look, let's let the market decide. But the market will vote for it because they spent all this money.
Has the BHP share price been affected because of this split?
Look, not really, because it's so small. As I said, it's less than 5% of BHP's current EBITDA. So it really is tiny. And my point, if it's such a good deal, why not just do a bit of a plebiscite of shareholders 6 months ago? Go ahead and do it and split the company.
And what is the collective dividend going to be if you hold both shares, you reckon?
It's not in the...
what do you reckon?
Look, it'll be up by an extra couple of cents or so, because, 5% increase in you're probably looking at somewhere about 5 or 6% increase in dividend.
You're going to sell yours?
I don't think there's going to be a buyer on day one. So, yeah, I'll let the market set the price. I don't want to own the assets if BHP doesn't want to.
OK. Let's go to iron ore and the prediction for iron ore. And you brought a chart along. A lot of us, iron ore topped out around 180 US dollars a tonne, and it's now around, what?
Low 60s, yeah.
Low 60s, yeah. But before then, have a look at this. It was quite a long time where it was in the 20s and 40s. So.
Yeah, and I think that's the point if you look at a slightly longer-term perspective on iron ore prices. Yeah. This sort of peak that we got when, growth in China suddenly accelerated in 2008, 2009 up to $180. $60 a day still looks reasonable compared to where it was in 2004, 2005.
Was BHP share price doing well over 2005 to 2007? It must have before the GFC.
It did, I can't remember where it was in 2004, 2005, but BHP's share price did get to about $48 in about 2011, roughly, and it's now down to the low 30s. Yeah,
because when the GFC hit, according to that, June 2008, around that mark, it was $60.
Yeah. And I think the point that we're having there is people get so worried about Chinese demand. I'd say the bigger issue is supply.
Yeah, OK.
This is BHP, Rio, Vale out of Brazil, massively increasing supply, still plans to increase supply. Look what it's done for prices. I think the question for the board's got to look at is all this extra supply worth it? Do they really... part of the strategy is to squeeze out some of the higher cost producers. Yeah. But at the same time as doing that, they're just killing the price.
OK, let's go to oil, because it seems to me like what BHP, Vale and Rio are doing is a bit like what OPEC's doing. They're just flooding the world with supply and the oil prices come down. Yeah,
I mean, oil's a slightly different story. I mean, I don't think anyone saw the severity of the drop coming. But this, again, is a graph of oil prices over 10 years. Yeah. And we're currently sort of in the very low $50 level. I think the other point to note from this graph is not just the occasional spikes you get, but it's been this low quite a bit and sat there for quite a long time.
Yeah, the average prices were closer to 50, not the big ones that we got used to.
And this is as much, obviously seen the increase in production in the US from shale oil and the Saudis holding their line on their production. So, look, without trying to... I'm no expert on where the oil price is going to go, but I think the take I have for stocks like BHP and Rio and Santos at the moment is there's no sign that these prices have yet bottomed. Yeah. And I think, as George was saying earlier, it's a brave man or a brave person.
Let's not be sexist here, mate. We've got a lot of female investors here. But
brave investor, I should say. Yeah. Who's really loading up on these stocks just yet.
Yeah. OK, so but the analysts, you showed me a chart the other day. BHP got 25% higher, Rio, Santos, they got a good view on Santos. Well, are the analysts wrong, Paul?
Well, the analysts have been bullish on BHP and Rio for a long time. So just to, the analysts, I think, have got a consensus price on BHP of about $35.30 compared to about $31.50 odd today. And on Rio, their consensus price is $72.76. So it's about 35% away from today's price, around $57. Now, they have had pretty high prices here for some time. They've been bullish, they remain bullish, and I think one of the things is they're factoring longer term a lot higher commodity prices. Yeah. So I think that's the issue. Yeah. When you look at those graphs, you see the suddenness of the fall. Is there any sign yet that it's bottomed?
So for people who want to believe the analysts are right, what do you reckon is the key economic indicator to watch? Is it the economic improvement of places like Japan and Europe? We know China's not going as the world we'd like, but if Europe actually starts responding to QE and Japan does as well, that could be good for commodity prices.
It might be have more of an impact on oil than iron ore. I think the biggest issue with iron ore is a supply side question. When is the supply going to dry up a little bit? When are the so-called high-cost producers in China? Because there's a whole lot of production occurring in China. We forget that China itself has a whole lot of iron ore mines.
Inefficient, but
inefficient, and part of their strategy is to see a lot of those high-cost producers close. I'd be more worried around iron ore around the supply side, and maybe with oil it's got to be demand. So if you see an uptick in the growth in Europe, that might be more of a signal around time to be looking for a bottoming of the oil price.
OK, mate. So if you want to know about what Paul's thinking about this, you can have a look at the Switzer Super Report.com.au website, and he's got his articles there. Paul, thanks for joining us.
Thanks, Peter.
Okay, let's do a bit of a news hit now with Carolyn Herbert to see what's gone on in the business area today.
Good evening. The local share market edged higher today but remains stubbornly stuck just below the 6,000 point barrier. The ASX 200 rose 12 points or 0.2% to 5,969 points. The broader All Ords index picked up 13 points or 0.2% to close at 5,934. The Aussie dollar was buying 78.63 US cents at the close of trade. Consumer confidence rose 0.5% in the week ending March 22, driven by improved sentiment over the economic outlook. According to the latest ANZ Roy Morgan index, confidence towards the housing sector had been bolstered by the Reserve Bank's interest rate cut in February. Despite the improvement, sentiment remains below the long-run average levels and 2.7% lower than a year ago. ANZ says the federal government's upcoming budget will be the next key test for consumers. Citi has slashed Australian growth forecasts over the next 2 years as it expects 2 more rate cuts from the Reserve Bank. Citibank analysts have lowered GDP growth projections to 2.5% in 2015, down from just below 3% previously. The downgrade reflecting subdued 2014 end growth and a weaker economic momentum going forward. Citi also added an unofficial rate cut to its forecasts, now expecting the RBA to bring the cash rate to 1.75%, citing a move towards an interest rate hike by the US Fed and signs of a deeper slowdown in China as demanding greater RBA support. Citi also acknowledged a dovish Fed could make it harder to achieve a previous year-end forecast of US 70 cents. China manufacturing fell to an 11-month low in March, dropping into contraction territory. The HSBC PMI came in at 49.2, missing economists' expectations at 50.5. Analysts say the disappointing read signalled a slight deterioration in the health of China's manufacturing sector. The release has some analysts suggesting more stimulus is needed to boost factories in China. And that's the latest in business news.
After a long period of the building sector being in a downturn, it all looks to be turning around. But how are the country's architects faring? Nick Tobias is an award-winning architect and should be able to shed light on how the profession is performing and also maybe how the economy is going. Nick, thanks for joining us.
Thanks, Peter. Good to be here.
So tell us what kind of architecture you specialise in.
Look, Peter, we're a boutique firm. We do about 80% residential single-dwelling work. So that's, specialised houses, predominantly in the eastern suburbs, but up and down the coast of New South Wales.
A colleague tells me you did some spiffy house in Whale Beach recently.
We did.
Yeah, got a bit of publicity for that.
Yeah, beautiful house on a double block there going down to the water.
Yeah, okay. And also recently the iconic Bondi Beach, you've just completed a project there.
Yeah, that's been a bit of an epic project right there on the rocks at Ben Buckler. So
that's the northern end of Bondi.
That is the northern peninsula of North Bondi. Some people know it by.
That's where Malcolm Turnbull and Peter Switzer were surf club members together.
Yeah, absolutely.
Yeah, many years ago. All right. Now, Nick, tell us, because you're in the upper end residential area, I always like to talk to people like you to see what you're feeling about the economy, because the sort of people you deal with, when they're feeling really cocky and confident, they're happy to spend. What are you seeing happening right now?
Well, look, there's no doubt that our practice, especially in that high-end residential sector, is tied to the economy, tied to consumer confidence, and especially tied to the financial, banking, funds management sector. So
yep.
When all of that's going well, when the share market's going well, when bankers are getting bonuses, that's really good for us, and we're a great indicator to see.
Okay. So what are you seeing now?
Look, we're seeing people making a decision, well, for the last year or so, we've been seeing people making a decision that enough's enough in terms of sitting on their hands. Yep. They're deciding to either spend money on the property they're in or they're moving to another property. There's a lot more transaction happening in the high-end property sector, especially in the eastern suburbs, North Shore as well. Yeah. So we're seeing a lot more people coming to us.
So if you compared it, say, straight after the GFC, you were at a boutique firm. Yeah. Was it an easy time to be in a boutique firm?
It was not an easy time at all.
Because a lot of architects actually just, threw away their T-squares and just went away, didn't they?
They told us when we started studying architecture, get your taxi licence just in case, make sure you're prepared. And that's basically what happened. We had all of our financial services clients ringing up and saying, look, can you put that on hold for a little while? Yeah.
OK. So now you're starting to see a turning point. As a consequence, the demand for building services is it becoming harder because you guys are also project managers as well. Absolutely. So therefore, you would know what it's like to get people in the building game. Is it getting tighter and tougher to get people?
It is. I mean, we work in the very, very, 1% part of the market. So we do have builders that we work with all the time. We have amazing relationships with those guys. The difficulty that we have is I have never, in the 15 years I've had my business, seen the building costs go backwards. GFC or no GFC, it is so expensive to build in Sydney.
Oh, I see. But you're not seeing them going backwards. They're still rising.
Absolutely.
Because, there is a bit of a sign that inflation isn't growing. But at that upper end, you're seeing a lot of strength there. But in many ways, Nick, that's why I like to talk to people like you. It's normalcy. GFC created a weird period for 4 or 5 years. What you're starting to see was like the normal practices that existed before the GFC, they're starting to creep back.
Yeah, absolutely.
Okay, so what about the confidence in the building industry generally? You're talking at the upper end. Clearly, you deal with other people, in the other aspects of your profession. Are they finding it also that they're reaching a turning point, or is things still pretty tough?
Whereas a year ago we were getting phone calls from builders, we were getting phone calls from particular trades and craftsmen that we deal with saying, do you have any work around? No. There are no phone calls anymore. Yeah. They are all really busy. And the good guys especially.
Yeah, and I also use the cranes on the horizon indicator, and there are a hell of a lot of cranes on the Sydney skyline.
Yeah, and hoardings up in front of houses, builder signs up everywhere. It is extremely busy at the moment.
What do you think, would be the implication for Australia and for the building sector if we see another interest rate cut? Do you suspect, you have a good feel for what's going on in the Sydney market. Do you think we will actually go right over the top?
Look, irrespective of how much my clients are or aren't borrowing, I think the interest rates are they have such an impact on confidence. And every time they go down, you see the emails going around, it's in conversation, and we certainly see it amongst our clients. It's a confidence boost every time.
Yep. Are you seeing any interest from Asian buyers to contract your services? Like obviously they're buying properties. Are they then using architectural services as well?
They are. We've had a couple of clients from mainland China. We've got one particularly large project where the client bought a property for more than $50 million. They're looking at spending more than $15 million on it. We've done some work and consultancy for them back in mainland China, so it is starting to happen.
So what's the future? Are you going to remain a boutique firm, Nick, or would you like to become a multi-branch business right around the country or maybe even internationally?
No, we'll stay boutique. We may work internationally, but we will always aim for the very, very pointy end of the design market. Okay, mate. Well, thanks for joining us. It's great to see that you're feeling a little bit more confident. It makes me feel more confident too. Cheers, mate. Thanks for joining us. Okay, so that's Nick Tobias. After break, we'll see how a young Aussie entrepreneur is cashing in on the Chinese chase for Aussie property.